Hi everyone, I'm Sabrina.
And I'm Jonathan, and we are the lawyers at Varity Law.
It is tax season in Canada. I have just filed and paid for my corporate taxes at the end of March and personal taxes at the end of April.
You and most of our clients. So today, our topic is about the taxes involved in estate planning and property transfers.
So in general, there are three types of taxes when it comes to estates: probate taxes, estate property taxes, and terminal income taxes.
Of course, your estate can be much more complicated and have other types of taxes, especially if you set up a trust. But today, we're just going to focus on the three types of taxes which most estates need to file.
Okay, so what is probate tax?
Well, that is the tax that every estate needs to pay as long as the total estate value is above $50,000.
So this tax is payable to the court that approved the probate. Unfortunately, the court will only accept a bank draft delivered to them. There is no direct deposit or online payment option.
Yes, so it is crucial that you get three things correct. First, you must know exactly how much the probate taxes will be. If you pay too much or too little, the court could reject the payment. Second, you must know which court to send the draft to. Third, you must ensure that the court already has the estate file in their system before you send the bank draft. Otherwise, the bank draft will be sitting at the courthouse with no case to attach to. This increases the likelihood that the court would lose it.
So don't worry, we will be going over each step in detail. Okay, so how much taxes to pay? In general, you pay 1.5% in probate taxes for any amount above $50,000. That sounds pretty easy, right?
Well, that part is easy. The hard part is knowing exactly how much the total estate is worth at the time of the deceased's death.
Yes. The key is at the time of the deceased's death. So let's say the deceased passed away on May 1st, 2024, and back then the estate property was worth $1 million. By the time probate is approved and the property is sold in 2025, the property is now worth $1.2 million. However, we will still use the value at the time of death, being $1 million, to calculate probate taxes.
That's why it's essential to get very accurate estimates of the total estate value before you file for probate. The court expects the total value will remain the same when you apply for probate and when you file the probate taxes. If there's a difference, the court would require an explanation as to why. This must be in the form of a sworn affidavit done in front of a lawyer.
Yes, and for more information on how to calculate the total estate value, please check out the link to our previous video, which is listed below.
Now, within 6 months after the probate approval, the executor needs to do an online filing for the estate taxes. This requires the executor to list in detail all types of estate assets and their value at the date of death. Once the online filing is completed, the case is assigned a new EIR, Estate Information Return Number. This is different from the case number assigned when the executor first applied for probate.
Yes, and the executor should be putting this EIR number on the bank draft when paying the probate taxes to the correct courthouse. Again, the bank draft need to go to the court that approved the probate in the first place.
Keep in mind, there are a few types of assets that are excluded from probate taxes. This means that you should not be including them on the online filing forms.
So those include any assets that are held jointly by the deceased and one or more people, such as joint bank accounts or real estate owned as joint tenants. Any assets with a designated beneficiary, such as life insurance, RSP, TFSA, RIF, and anything held in a trust or in a corporation if the deceased has a valid corporate will.
Of course, since they are not included in the online filing, this also means that they are not subject to probate taxes. This is why some advanced estate planning is crucial to reduce the amount of probate taxes payable.
Yes, planning ahead would definitely make a big difference.
All right, so there are three important points to remember about probate taxes. First, the taxes are calculated on the total estate value at the time of death, not at the date that the probate was granted or when the estate was settled. Also, the only debt that may be deducted from this total value is the mortgage outstanding at the date of death. No other debts, like credit cards or vehicle loans, may be deducted.
Second, the online filing of probate taxes must be done within 6 months of receiving probate approval. This should be done ideally a week or two before the payment of probate taxes. Once the filing is complete, a new EIR number will be generated.
Lastly, The executor would make a bank draft payable to the Ministry of Finance and deliver it to the court that approved the probate in the first place. And they must put the EIR number on there so the court will know which case to assign the check to. It is crucial to first complete the online filing and then around a week later, make the bank draft.
Of course, this whole process is much easier and more accurate when done by your probate law firm.
Next, let's talk about estate property taxes. Estate property is a property that is owned by the deceased. Now, if the deceased lived in the house during their lifetime as a principal residence, then when the estate property is sold or passed down to the beneficiaries, it would be tax-free. But if the deceased used the property as an investment property, then the property would be subject to capital gains when it's sold or passed down to the beneficiaries.
But I have good news. Either way, there will be no land transfer tax payable if the beneficiaries decided to go on title themselves.
Exactly. But if the estate property is a principal residence, the most efficient way is for the executor to sell it tax-free, and then the beneficiaries inherit it tax-free as well. Do not first transfer the property to the beneficiaries and then sell it under their names, as then the property may become an investment property subject to capital gains. The only time it would make no tax difference is when the beneficiaries are not existing property owners.
Yes, another good news is that the foreign buyer ban does not apply to inheritance. This means that even if the beneficiaries are not Canadian citizens or PRs, they can go on title to the estate property. And since there is no land transfer tax, the 25% foreign buyer tax would also not apply.
But do be careful with mortgages here. If the property does have an outstanding mortgage and the beneficiaries want to inherit the property, then they do have to apply for a new mortgage under their own names. While estate properties can be inherited according to the will or estate legislation, mortgages cannot.
Yes, because mortgages are owned by the banks, not by the deceased. They're not the deceased to give.
And unlike family transfers, where the new owners being added on to title need to pay land transfer taxes on the old mortgage outstanding, estate properties have no land transfer taxes for the beneficiaries whatsoever, even if there's an outstanding mortgage.
That's great. Definitely great news for our estate clients. Now, lastly, let's talk about terminal income tax.
All right, so this is the tax that needs to be filed by the estate's accountant. Ideally, the estate should use the same accountant that the deceased used during their lifetime, as they would have all the information about the deceased's tax history.
Yes, the deadline to file for income taxes is either April 30th of the year after the deceased death, if they passed away before October 31st. Or if the deceased passed away in November or December, then it will be 6 months following their death.
Now, unlike probate taxes, the CRA treats the deceased as being alive until the estate is finally settled. For example, let's say Charlie passed away in June of 2024. Then the estate needs to file for Charlie's 2024 taxes before April 30th of 2025.
But let's say probate approval was granted in the subsequent year, 2025. Then in 2026, the executor finally sold the estate property and consolidated all bank balances into a single estate account. So the estate wasn't fully settled until 2026.
Now, the executor would still need to file income taxes for the estate or the deceased person for both the tax year of 2025 and 2026. So by April 30th, 2026, the executor must file and pay income taxes for the deceased in 2025. And by April 30th, 2027, the executor must do the same for estate assets sold in 2026.
So basically, 1 year after all the estate assets are sold and distributed to beneficiaries, that is when income taxes are finally done.
And one more piece of good news. When the beneficiaries receive their inheritance, it is not taxed again. This is a great benefit for beneficiaries who inherit assets located in Canada.
Okay, let's do a quick conclusion. There's 3 types of taxes in Canadian estates. First are probate taxes, which is payable on any estate value above $50,000. The probate tax rate is 1.5%. The filing and payment deadline is 6 months after probate approval. The executor must ensure the total estate value on the probate application is similar to the total estate value on the probate tax filing. After the executor completes the online probate filing, an EIR number is assigned and should be included in the bank drafts and sent to the court.
Next, there's the estate property land transfer tax. The good news here is that there is none. In addition, foreign beneficiaries can inherit properties, as this is exempt from the foreign buyer's ban and, of course, the non-resident speculation tax.
Lastly, there is the income taxes of the deceased. This must be filed for every year after the deceased passing to the year that all estate assets are settled and given to beneficiaries.
As you can see, tax planning is essential to estate planning. Please ensure you work closely with your estate lawyer and accountant.
All right, that's all for today. Happy tax season, and we will see you in our next video.